Euro dollar. So a very significant day, as I've covered with the dollar, right? We have the FOMC rate decision, which is going to be very much dictating where euro goes, obviously being led by dollar. And as I noted, the decision itself is not the market mover. Markets are expected to remain unchanged. The market mover comes on the economic projections and the FOMC statement, which is obviously going to be shaping up what happens with the rate hike probabilities. And we're more focused on the back end from Q4 onwards. So keep an eye on September pricing, October pricing, December pricing. Let's see if the probability can jump back up to two or maybe even close to three hikes being priced in. Inflation is at a 3-year high in the United States, multi-year highs. We're at war. We've got war going on. If you look at euro structurally, we're still bearish, right? We could still be forming what we could see as a lower high for a continuation to the downside for a lower low. If we see what's happened on the 4 hour at the moment, very key area of liquidity at 1620. Price action, if you more or less just in pullback structure at the moment, where we're printing higher highs, higher lows, but we could look at this as a potential wedge, potential bearish flag. Key area of liquidity here at 1620, which could be equal highs. I don't know if we're going to get full on commitment, but I personally wouldn't be recommending jumping into trading now ahead of the FOMC. But the key areas of liquidity at 1620 and in 1650. Obviously, if the FOMC are hawkish, this is going to come all the way down. We're going to be challenging 15s area of liquidity, and then ultimately a lower low would be viewable for me in towards 1450 as a swing opportunity or a swing possibility, should I say, because obviously not financial advice. There's still a lot going on at the moment between on a geopolitical level. Tehran warns of harsh response. Lebanon over Lebanon attacks Israel attacking Lebanon. So it's all very much sensitive and all very much still inflationary. But keep an eye on the data of FOMC. Obviously, if it's hawkish, if it's not hawkish, should I say, we're going to be challenging 1650, this former high here, and there's no reason as to why we couldn't be flying in towards 118 if markets start decreasing largely the probability of rate hikes. But I see that as less likely to happen. But let's see. Trades, safe trading traders, obviously for ongoing analysis, all that good stuff, trade ideas, macro, fundamental, manual, AI, all that. Check out the link in the description or somewhere around this video in the article.